So thank you for having us here today. It's greatly appreciated. It was interesting sitting through the lithium one. It takes me back to my past a little bit. And I used to, particularly last question, advise Chinese clients into lithium projects in South America. So it was nice to get an update to what's going on in that market. But we're here today to talk about gold in Tanzania. So I'm the Chief Executive Officer of TRX Gold, formerly Tanzanian Gold. And I'm going to start off on the first slide here. Here's a picture of our property in Tanzania and a couple of things of note. We are producing at this point in time, and we have a large exploration blue sky potential on the property as well. It's an underexplored property on our special mining license. A couple of things to note on this particular slide is the open pit will go off into the horizon into the northeast, and as well as go to the same distance in the south. Ultimately, when this property is fully developed, we're currently mining oxides and have a very, very large resource of over 2 million ounces in measured and indicated category at a high grade of 1.8 grams a ton, as well as 636,000 ounces in the inferred category. And as I mentioned, we are currently in production, and I will get into that and what we plan to do with that cash flow in a few minutes. So, as I mentioned, we are in Tanzania, and Tanzania has received significant investment over the past year from in the mining sector. A couple of those investments would be BHP put an investment into Kabanga Nickel for around $100 million. Barrick has its Bulyanhulu North Mara complex there, tier 1 assets as they classify them, and they continually invest into those assets. We're 30 kilometers from the Gator Gold Mine. OreCorp has a large property there that's listed on the Australian Exchange, as well as Walkabout Resources doing graphite project. And just in general, Tanzania has become an investment jurisdiction. There's a lot of investment in infrastructure and in the oil and gas sector as well. As I mentioned, we're into production. So over the last year, we've managed to take a small test plant and turn it into a much larger plant. The plant is currently expanded to 1,000 tons per day. That has come online this week, and we'll have an update to the market in the next week or so. We expanded the plant to 1,000 tons per day from 360 tons per day. And I'll get into some of the results for that plant, but it's been very low cash cost and very high margin operation thus far. I'm still producing relatively small ounces, but really growing and producing positive cash flow at our site. With regards to the exploration upside, we're de-risked. We have a special mining license, and we've discovered a couple of new shear zones in the last 12 months, and I'll get into more details on that in a few minutes. Andrew, if you can join back, he'll take you through that exploration portfolio and the blue sky potential. With regards to the executive team, I'm the Chief Executive Officer. I joined just over 18 months ago now, and we've had a massive turnaround since then. All the people that you see on this slide are new individuals. Andrew joined as our COO. He has mining experience, both large miners and small miners, and he's also worked for private equity firms in evaluating mining assets. Mike Leonard joined us as well. He's a former Barrick executive and has had experience in investor relations, financial reporting, and other functions within Barrick. On the Tanzanian side of the equation, we have Khalaf Rashid. He leads our Tanzanian office, and he really is a businessman in Tanzania that has the right connections and really knows how to get things done there. And then on site, we're in good hands with Gaston and Isaac. Gaston's our general manager. He's built plants for Barrick as well as Teranga in Senegal. Very safe set of hands. Now he's building plants at Buckreef in Tanzania, and Isaac has had significant experience from an exploration potential in building out exploration programs and expanding resources. So we're in very, very good hands and very experienced and well-seasoned management team. With regards to our capital structure, as mentioned earlier, we're listed on the New York Stock Exchange. We have a market cap today of around 110 million. It was higher a couple of weeks ago, but we all know what's happened in the financial markets over the last couple of weeks. But relatively on a year-to-date basis, we're currently about even. We did hit 52-week highs approximately 3 to 4 weeks ago. So we've kind of bucked the trend from a share price perspective. We're predominantly retail held stock with over 15,000 shareholders. We have some institutions as well as a significant ownership of friends and family. Right now, we have liquidity about $10 million cash on the balance sheet, and we have a plant that's in operation producing free cash flow. So we're in good financial position, no debt. With regards to Tanzania itself, as I mentioned, it is becoming an investment destination. It's a top 10 African gold producer, and that's growing. I mentioned some of the investments in the area. GDP, the ministry would like to get mining as a percentage of the economy to around 10%. It's currently at around 6.5%. And what they found from an economic perspective is mining really held up foreign currency, particularly when COVID hit and tourism declined. Tanzania is very well known for tourism. There's Mount Kilimanjaro, there's the Serengeti, as well as Zanzibar. English and Swahili are the official language. Rule of law is common law there. And it has solid infrastructure. We could drive to our site. The last 15 kilometers are unpaved. We're connected to the national power grid. There's a large hydroelectric facility going in place that is around 10 kilometers from our site, and that's where the power lines run. So ultimately, when this becomes a much larger project, we'll be connected to that. That Julius Nyerere hydroelectric facility comes online in about 2 years' time. And I always say this, the biggest part of infrastructure in Tanzania, from my experience, particularly over the last 12 months, is the human capital side of things and the skill set in Tanzania. Tanzanians like to work and they do good work. Also, given that the major mines have been in this region for over 20 years, there is programs in their universities for mining engineering, for geology, and other disciplines that are relevant to mining. These people go through those programs, go to large miners, then go through it out Africa or other parts of the world, get broader experience, and then want to come back home. And that would be the case with regards to a lot of our colleagues that are at Buckreef. With regards to where we're located, Andrew is a geologist, so I'm going to let him explain exactly where we are in the world. If your mic is unmuted, Andrew, in the Lake Victoria Greenstone Belt.
Yeah. So Stephen, are you?
I can hear you just fine. Thank you.
Okay, good. Just needed a reboot on that. Well, thank you very much. And we're over those technical difficulties. So what we're looking at here is a deposit at this point in time of 2 million ounces of measured and indicated mineral resource, running at about 1.8 grams a ton, plus an additional 600,000 ounces of inferred mineral resource running at 1.1 grams a ton. I think also very important to point out that we are fully licensed. We have a special mining license that's good to 2032. The government gifted us an extra 5 years recently, and it's renewable at that time. In terms of the geology, we're on something called the Inner Arc. You'll see some big names here: AngloGold Ashanti with the Gator mine, Barrick with their Bulyanhulu mine, and then the past-producing Tuluka mine formerly with Barrick and now with our JV partner, Stamiko. No shortage of gold in the area, as you can see. And in fact, Stephen, I think we often remark just how much mining there is around us. So we're in an area where there are, as the cliche goes, elephant deposits. There's no doubt about that. We think we've got one of those, and there's lots more to still be found. Back to you, Stephen.
Yeah, thank you, Andrew. Perhaps you might want to give the audience a sense of where other greenstone belts are found in the world, such as the Abitibi in Canada, and the fact that, in greenstone belts, you typically get straightforward metallurgy, which is what we're finding. So, i.e., no science projects.
That's right. I mean, we're looking at 90% plus recovery, even in the oxide layer at this point in time. Metallurgical work on the sulfides has been similarly very, very positive and is the subject of ongoing work. You're right, Stephen. We are in the Archean Greenstone Belt. This is very similar to the Yilgarn of Australia or the Abitibi of Canada. Rocks here at a similar age, again, actually about 2.7 billion years old. And what controls the gold mineralization is shear zones, and that's exactly what we've got here, and I'll touch on that a little bit later.
Thank you, Andrew. So with regards to our deposit, as we mentioned several times, currently we have a resource of well over 2 million ounces. It does come to surface, it's flat, so it's very mineable. We like the mining widths are 20 meters in width. We're experiencing 90% recovery rates, as Andrew rightfully just mentioned. We do have a special mining license, which is good till the end of the deposit. It's renewable in 2013, as mentioned by Andrew. And currently we're into gold production. We're forecasted to hit over 20,000 ounces in the year to come up. That will be over the next 12 months. And then at a very low cash cost. And we're going to utilize that to do a different business plan than most juniors. We're going to take that cash flow and put it back into the drill bit and expanding the operations in order to continue the growth profile of our overall business. We're 100% Tanzanian as well, on site. As I mentioned, our business plan is to produce. You'll see our plants there in the background. They're actually much larger than that today. We'll have updated pictures. We're going to utilize that to put into the drill bit, as well as to advance our sulfide project, which is 90% of the resources that I mentioned. And this is all in the Buckreef main zone. And Andrew will get into it in a minute, what we have across our property, particularly the new discoveries in Anfield and Buckreef West over the last 12 months. So with regards to some of the results that we've had from the production profile, as you can see here, some updated pictures. They need to be more updated today. You'll see the mills in front of them, and the mills are actually turning. We got videos of that over the last couple of days. So with regards to the year-to-date ended August, we did around 8,500 ounces in that year. As I said, that's going to ramp up to 20,000 ounces plus, and then we'll continually look at how we continually ramp that up even further over the next year or so, and we're currently thinking about plans for that. With regards to some of the operating metrics, we've achieved in the last quarter $508 cash cost, and we're going to be targeting anywhere in the range of $700 to $800 an ounce over the oxide mine plan, which is around an 8-year plan, which represents 10 years, 10% of the resource. And we'll continually look at ways to continually expand that so we can get more cash flow, particularly in a declining gold price environment. We can't impact the top line and what we get on gold price, but we can certainly start to impact the production profile of the asset so we can continue to have revenue growth as well as EBITDA growth throughout this period of market volatility. With regards to the overall property, I'm going to have Andrew explain this. As I mentioned, most things we're talking about here is in this main zone here, which is in to the left and has the density in the dots. Andrew?
Yeah, thank you very much, Stephen. And for our audience today, just let me point out a couple of things on this image. You'll see the black squares. Those are 2 kilometers by 2 kilometers in size. You'll also see our special mining license highlighted in red, and that's 16 square kilometers. You'll also see a green line at the top, a green line at the bottom, which demarcates the boundaries of that, what we call the inner arc greenstone belt. The main geological fabric is actually east-west. However, our main deposits are sitting on a northeast-southwest trend. And just for the geologists in the audience, very quickly, there's textural movement on the greenstone boundaries. And what we're actually finding gold mineralization is occurring in what is known as radial shear zones. I think that's enough geology. But what it means for us is that we've got the main zone. We're testing extensions to the north. We've extended and published results where we've extended known mineralization now another 300 meters to the northeast. We're testing to the south. We would expect to find other shear zones around, for example, on the right-hand side, Bingwa or Tembo to the south. But our big excitement has been the discovery in the Anfield zone. Our geologists were sent out into the field, go and do some geological mapping. We're great believers that geologists should have their boots on, and those boots should be on the ground looking at what we've got. And you'll note that the little white dots, and these are small artisanal pits. They're not active at the moment, but they very clearly demarcate a zone of mineralization that is parallel to our main zone, about 500 meters to the east. It lines up with the Eastern Porphyry, which is a historical resource in which the best intersections in there, which have been published, are 3 meters at 30 grams a ton. And you'll see that it also links to some infrastructure just off our property boundary with a road going into it. And that is a intermittent Chinese mine that is mining from time to time. So please take away that we've got about 3 kilometers of new strike length. It's anchored in the northeast Eastern Porphyry, historical resource of about 100,000 ounces, and an operating Chinese mine to the south. Now, one of those pits was quite deep, and it went into fresh rock, and you can see the sample that came out on the left. This is classic Archean greenstone, sheared rock. You can probably see in there the sulfides and the fracturing. This particular sample has come back at 28 grams a ton. We've had others at 36. Taking rocks from the waste pile came back at 5 grams a ton. So we've got a lot of potential there. We will get around to be drilling that over the next year. So not only do we just have the Anfield zone, but also identifying other shear zones in the area through detailed mapping of the artisanal mining. So expect more discussion and revelation on the upside. Stephen, back to you.
Andrew. So here's the slide with the thumbnails. You just want to take the audience through that. And,
just very, very quickly, these are thumbnails that they can be sort of looked at a bit more detail. I'll focus on the one on the top left today, Stephen. Again, it shows the density of drilling we've got. It's a section through the deposit with all the drill holes projected onto the plane, and you can sort of see the intensity of drilling we have in the top 150 meters in particular. And that gives us great confidence in the mine planning that we have. This is all falling into and has been declared as a measured mineral resource and therefore a proven reserve. But it's been very, very robust for our mine planning. And then if you just sort of look a little more closely, you can sort of see these arrows coming down, which say the deposit's open, as it explained, to the north, to the south, but also these higher grade chutes. And in time, this deposit will go underground. We've had a look at that, but our main focus at this point in time is extending the length of the open pits from surface. And then just coming off the main zone on the top right is the Buckreef West. It's an advanced project. We'll be coming back in to do some infill drilling and to identify further oxide mineral resources for our mill. And I think we've already talked about the other two underneath, Stephen.
Yeah, no, thank you for that, Andrew. Look, I'm not a geologist by training, but I know the unknown and what's potentially there. It always puts a smile on my face with regards to what comes up with each drill bit, and we're having some really good drilling success.
I think the enthusiasm of the Geology team and business that we have around this aspect of the project, Stephen, is really wonderful. It still brings a smile to my face, even though sometimes I get called a veteran. These days, just wonderful to be able to sort of see younger geologists enthusiastic, wanting to get out there, making discoveries.
Yeah. So for instance, we've extended the Buckreef main zone 300 meters to the northeast. The drill rigs are currently on the main zone doing infill drilling, but they have been to the south looking for structure as well. And we'll have some details on that as those assays come back.
Yeah, maybe just back to that one on the top left, though, for example, you'll see there's a little arrow coming in there. That was an intersection about 200 meters below surface, 50 meters running at 1.8 grams a ton. And there was nothing further to the north from that. That was the last drill hole at the time. And we've published some of our additional results that have been intersected to the north of that. And we've also discovered new zones as well to the north.
Yeah, so I'm keeping my fingers crossed.
I could talk about it all day, as you know.
Yeah.
Back to you.
I'm hopeful there's going to be a lot more gold there. Now, with regards to Andrew mentioned earlier, the density of the drilling that's been done, particularly in the first 100 meters of the deposit, which gives us the confidence to go forward with the oxide project, which is doing extremely well. But it also gives us the confidence to continually move forward, 90% of those resources, which is the sulfide project. So the company, prior to Andrew and myself joining in 2018, did a fairly robust PFS. But the issue with the PFS is it was 51,000 ounces. I love the cash costs there. CapEx was low, although we're achieving much lower CapEx numbers than that on our oxide operations. But the resources have also doubled over the last couple of years. So what does that tell you? The project there is too small. So for the size of the deposit and for the exploration potential deposit and the fact that it's so densely drilled in the first, say, 5 years of production. So what we're focused on is increasing that 51,000 ounces by 3 or 4 times, hopefully, from a sulfide project development. And to do that, we are converting resources to reserves. And like I mentioned, the drill bit is currently on the Buckreef main zone doing that. We're validating metallurgical results. We know what the recovery rates are on the top because we're mining it. So they're 90% on the oxides. We have 3 deep holes in the preliminary study, 90% there too in a straightforward flow sheet, have 19 holes drilled down between, and we're hopeful that the results come back exactly the same. Over the next year or two, as part of our oxide mining plan, we will hit some sulfides. They will go through our plants, so we'll have a live study on that as well. We'll be evaluating a phased development exactly the same as what we're doing the oxides. As I mentioned, we started off at 360 tons per day, ramped it up to 1,000 tons per day. Chances are we're going to continue to ramp it up even further. And then we'll be doing the same thing on the sulfides. If the met comes back straightforward, as we hopefully anticipate, as I like to say, this will be a Cushing, Texas of CIL tanks in Tanzania with ball mills in the front. As I mentioned, we need to increase the annual production rate in order to get a really good valuation for shareholders while keeping the share count down. In order to do that, we'll be looking at our geotech work, our MET study, as I mentioned, looking at tailings characteristics, so in evaluating dry stack tailings as well, and doing other things that you would do on a property of this size and scale, like species at risk and water balance and those sort of things. With regards to ESG, I'm going to turn back over to Andrew because he really likes to talk about ESG. We don't see a picture here of him dancing when he was delivering some of the school deaths that we did in the region, but and he's smiling and laughing at that. But look, we're local in the community. We're 100% Tanzanian. We hire a lot of local people, and we want to continue to do that. So the local community really benefits. We do things from an ESG perspective that you would normally do in any company. We recycle 100% water. We're on a national power grid, which is predominantly hydro. And we take care of the local community with regards to schools and other things. We've also started to change over board members, put in place governance procedures at the board, and upgrade along those. Anything to add on this perspective, Andrew?
Well, apart from that, there was a fine moment of dancing on the national television, which the minister advised that I don't do that again.
Yeah, I think we're all advising that. We'll try not to have you do that again.
Yeah, thank you. But more to the point, what I'd like to do is just leave this slide on, Stephen. This is great. I think in today's world, into the business perspective, you'd have perhaps caught earlier on in the presentation that we deliberately used the word purposeful ESG. And so when we look at things, we look at that it has to have a purpose. And in the context of shareholders, that is that it has to reduce costs or reduce supply chains or reduce risk. And the tanks that you see, both the ones on the top left, where you're standing in the middle there, Stephen, and the ones on the bottom there in red as they're being constructed, these were all made locally. So they haven't come in from China. They haven't come, hasn't come up from South Africa. There's a shipbuilding industry on Lake Victoria, 300 kilometers away, that were delighted to have the opportunity to do this. The guys said, look, we can make ships. We can do all the steel around it. So we've got plasma cutters. And so we've worked quite locally. And what that has done in a world which is really sort of feeling the effects of supply chain disruption, we've brought that supply as close as we can to the mine. And therefore, we haven't been disrupted. And that's hence why we've been able to bring projects on time, on budget. Now, from the Tanzanian perspective, we've worked locally and employed locally. So there's a benefit, obviously, to the nation, but there's also a significant benefit to the company and the shareholders.
Yeah, I would challenge.
Stephen,
I challenge Andrew. Any mining company, we put up a 1,000-ton per day plant for well under $10 million, and I would challenge anybody to come up with a similar figure in a lot of other mining companies. So, with regards to things that,
and we've done it safely as people would expect.
Yeah, exactly. With regards to this slide, it shows a lot of activity over the last year. You'll see ball mills being installed, exploration being completed, new contract miners on site, a lot of government officials, our first blast, and most importantly, smiling colleagues, because smiling colleagues, happy colleagues are very productive colleagues, and they've all done a great job on site. With regards to where we are from a valuation perspective today, if we would have looked at this 6 months ago, we would have been the first block. But then we started to report revenues and gross profits and cost and those sort of things, and they were all very good. So we started to get a re-rate, and that's part of the reasons why, as I mentioned, our stocks about even on the year versus most of the peer group being down. Driving shareholder value going forward, we'll continue to get a re-rate as we continually grow production profile over time. We're going to be adding ounces. That increases value as well. Increasing production adds into NAV. Having a larger project scope adds to the NAV, while always keeping an eye on the denominator. So I really keep an eye on, resources per share, NAV per share, and EBITDA per share. Those type of metrics as we continually grow up. The goal here is to be predominantly self-funding in our growth profile. As I mentioned, the plant is online. It will start to produce even increased amounts of operating cash flow to be utilized in the business. With regards to why TRX, we have a big resource already, and we have a lot of blue sky potential. So that's a major feature of that of our company. We're expanding mine production though to pay and put more drill bits in the ground to increase that resource. We have a new rejuvenated management team, and we have a large project to develop in the sulfides, and we're still an attractive valuation versus our peers, and we have multiple levers in order to grow share values as we go forward on resources and NAVs and other valuation metrics. So what to look out for? Well, I've just mentioned calendar Q3 is already here, and the plant is up and running. So we'll provide updates on that shortly. The sulfide project MET study, geotech studies will commence. We'll always continually have exploration results because we've got a lot of exploration to do, and we need to inform the market much better on how we plan to go about developing our sulfide project after we do the groundwork and put that in place. So without further ado, anything else to add to that, Andrew, before we get into questions?
No, I think that's a great summary, Stephen, and it's time for questions.
Yeah, so I see some of the questions in the comments box here. So I will ask you, Andrew, because some of these are a geology, and then I'll answer the other one. So the first question is, your grades and margins are very attractive. Do you have any indication of being replicated as you expand the resource? So are we seeing similar grade profiles as we put the drill bit in? I know the answer to that question, but I'm going to let you answer.
Well, yes, I think we've said as well, Stephen, as we've drilled to the north, we've seen similar size, widths, and grades of the extension to the north, and it's still another 200 to 250 meters to the boundary. I think the most important comment for the question from our listener is when we look at the Anfield zone and you look at that sample of rock that came out, it's come from a big system. This isn't just a small random quartz vein. This is a rock that's been deformed in a larger system to give it the characteristics that it has. And when we take that rock sample and we compare it to the high grade sections that we have in our main zone, we see many, many similarities: the silica, the sulfides, the nature of the deformation. So we are hopeful. It is exploration. And I know this is a public meeting, so I hope I've given enough of an answer, enough of a hint on what we expect.
Yeah, so another thing I would add to that question for our listeners is, can you comment, one of the important things in mineability of deposits, continuity of the deposit. i.e.
Yeah.
the grades continue along as you continue mining, and it's not nuggety where you get a bunch of good grades here, nothing, and then a bunch of good grades later. Ours is it has a very good continuity.
Yeah, and that's a really important thing in the deposit is continuity, and I can't emphasize enough. Like, we've got a deposit so far that is essentially 2 kilometers long, 2 kilometers plus, 20, 30 meters wide, near vertical, and comes to surface. And we do see considerable continuity over that distance. Yeah. And I think, Stephen, the other comment on this is continuity down the hole.
Yes,
all right.
That's right.
It's important to have continuity across the deposit, and we see that as well.
Okay, so I'll ask myself this question here: has there been any recent notable M&A activity in close proximity? So as I mentioned, AngloGold Ashanti's mine is Gated Mine's about 30 kilometers away. Barrick's complex is around probably 40, 50 kilometers away. And then you have OreCorp, which is another 50, 60 kilometers away.
Yeah.
So there's been a lot of mining activity in the region. There's a lot of artisanal workings in that region as well. With regards to recent M&A, we hear of things happening on smaller properties, but on the larger properties, there hasn't been a lot of recent M&A. Typically, with the larger guys, as you continue to build out and execute, then you become of interest. And next question here is, can you remind me of news you have on the horizon? Well, I mentioned it earlier, the plant coming online, the drill bits are always turning, so there'll always be assays and drill results coming out. And then we're commencing our sulfide project, met studies and geotech studies. So there'll be news out more, I would say, medium to longer term on how we're going to develop the sulfide project and continually ramp up overall production of the property.
Yeah, Stephen, it just simply takes time to do the metallurgical work and that has to be done. Yeah, it's a midterm.
Yes.
Excellent. Well, sorry, Stephen. Do go ahead.
No, go ahead. I think we're good. I don't see any other questions.
But I just got a couple here that had come through earlier. So you mentioned being self-funding. And can you just talk us through that sort of the mechanism there and how that distinguishes you from some of your, from some of the other names in this sector?
Yeah, so we're very lucky that the resource comes to surface, that is wide, that is flat, that it's straightforward metallurgically. Basically, we're just grinding, crushing it, and putting it through a carbon and leach system. And so the oxide resources are around 10% of the deposit, which represents well over 200,000 ounces, and we'll find more over time. And so we're mining those and getting good margins on them, and that will generate cash flow to put into the exploration program, sulfide project development for our asset. So basically, we're now at 1,000 tons per day, higher than that really, because the throughput is higher than that. And we'll utilize that cash flow in businesses. So most exploration companies usually go to market, raise, put out results, go to market, raise, and drill again, and put out big studies. So we have a different business model in which we're, as they like to call it in this industry, bootstrapping it up. We started off at 360 tons, gone to 1,000. We'll go higher over time, and utilizing the cash flow in operations to predominantly fund.
Yeah, Stephen. Sometimes I like to characterize that as a payable pre-strip.
Yeah.
Look, the sulfide project.
Yeah, I would say I like to take a business approach to mining.
Yeah, exactly.
Which is, just trying to find ounces and get value that way. You need to find ounces and you need to be valued that way too. But, if you have the opportunity to take a business approach, put in place projects that have very high IRRs and high returns, and then continue to ramp it up, I don't know why more people wouldn't do it that way. Yeah.
And Stephen, I think we're very focused as a company, as a board, on the denominator. So we're obviously we're not wanting to dilute current shareholders.
We had to recapitalize the company when I came on board, but now that we got everything stabilized, everything cleaned up, that's the go forward plan.
That's right. Yeah.
And you, obviously, because of the company's history, you're still listed in New York, and I just wondered how that has that had any effect? I mean, we know obviously that here in London we've got a market like AIM, which is full of very enthusiastic but discerning investors in this sort of space. You know, have you suffered at all from having that legacy listing in New York?
No, I like the New York listing, to be quite honest. The United States markets are different than the London market or the Toronto market. We're also listed in Toronto as well in the TSX. That is actually our main listing, but most of our trading and our capital raising is done in the United States in US dollars. And the US market, although more volatile, it's a lot more liquid than other markets. So, you know, on a typical day, even in this period of uncertainty in financial markets, we'll still trade 600,000-700,000 shares a day. And in very liquid periods, we'll be well up over 1 million shares a day from a liquidity perspective. So the New York markets have been very good. We don't mind being in the New York markets. We don't like the D&O insurance costs, but that's about it.
Yeah, and obviously you mentioned that you'd recapitalize. So yeah, assuming that you've obviously successfully done that once with the listing you have. So yeah, yes. That's helpful to know. And in terms of your investors, I mean, do you, to the extent you're able to know this, you know, what percentage are kind of smaller retail investors, or do you have any kind of large institutional investors or kind of sector players that have a share in TRX?
Yeah, there's some larger institutional players, and then there's some very large retail individuals, and then there's a lot of smaller retail shareholders. As I mentioned, we're a liquid stock, and also the breadth of the shareholder base is 15 to 20,000 names, and we evaluate that on an ongoing basis.
Excellent. That's good to know. I think a healthy mix is normally a good sign for these projects. So
yeah,
that's
when you add up last year at the AGM, when you add on to the fact of the institutional investor came into a capital raise just under a year ago, we probably had voter turnout of over 60%. So we have a very engaged shareholder base.
Yeah.